Welcome to Trading Tricks for Indices YouTube channel. This video is about the markets. I'm going to show you why the price is reacting in these whipsaw movements and why novice traders lost most of their capital in the sideways days. Okay, markets are not random. Most of the common persons or all over the world says that if you go to stock market, all your hard-earned money will go away and you won't get anything from there. That is not true. If you understand the markets and their market psychology and why it is moving like this, what is the reason for the move, you will get benefited from the move. Okay, when you see here this red line, I want to be bullish at this area at the pre-market analysis. I want to take the trade once the candle closes above it with bullish candle. I will be entering the trade and I put my stop loss below the candle. This is my my strategy for the day. So when price comes here and after the close of this candle, as per my system, I have entered after this candle and put my stop loss below like this here. Okay, and if you see here, once I take the trade, I have no control over the markets because I am not moving the market, because lakhs and lakhs of money is moving the markets with investors, swing traders and day traders. So I have to stay calm at this area and see whether my target reaches or not. On this day, the stop loss triggers and again the price moves in this way. Okay, and I may felt like the market is mean to me. It took my stop loss and taken and then it moves in my direction. I will not think like this because I know that markets are not random. There are lots of proofs that markets are not random, and you have to listen to the markets, what the market is telling you and what the scenario around here. How can I benefit in the market? You have to think like this. Now I will show you why these sideways moves are happening on these days. Novice traders are wondering why my stop loss always triggers and the move goes in my direction. Whenever they are in trade and they take profits of 1.5, 1:1.5 or 2% profit, they come out of the market and the markets are still going up and up and up. Whenever they waits for more than their target, always their stop loss triggers, because there is a particular way to trade sideways markets or the trending markets. If you apply trending tactics to the sideways market, you end up with big losses. If you apply the sideways strategies to the trending markets, then you miss lots of opportunities. This is the way you have to think. So I am here to show you why these whipsaw movements are happening and why the consolidations are happening over here. And this is one of the reason. This is not the exactly one reason or two reasons, but this is one of the reason. You have to think like this. Okay, if you see here, this is the place where in pre-market analysis I want to go bullish, and after the close of this candle, once it tests the level and closes above it, I am going to bullish in the market and put my stop loss below the candle because it's the rule for my system. And once it closes it, I entered the market and put my stop loss just below the candle. And if you see here, this red candle taken my stop loss and moves in my direction. Think of this. Whenever I was very confident about the system and I have entered it and took my stop loss and it moves in my direction, how frustrating this could be. If this triggers the stop loss and goes against my way, then there is a sense of satisfaction that my direction is wrong. But this case, it took the stop loss and moves in our direction and my direction, there is lots of frustration. Exactly at this point you have to act oppositely. Even in order to be frustrated, you have to think like this: my strategy is good, but today the conviction is not there, strong conviction is not there to take the price in the upward direction. That's why the stop loss got triggers. In a strong uptrend or downtrend, most of the time your stop loss will not trigger. This day triggers means there is a reason for that. I will explain why this day this happens. Okay, those who don't know about this is the CPR system where I use for the day trading. This is the daily pivot and this is the support S1 where I want to bullish at this area and took my stop loss and came till here. Again the price is rejected at this moment, and all over the day the price is sideways, and I am wondering why this is happening, because I don't know what exactly happening in the markets. So this I will show you the reason. If at all I don't use weekly pivots, I don't know that there are a strong resistance present over here, and those who want to take the price from this point to downwards are entering the markets in this area. Okay, this is where sideways days occurs. There are hundreds and hundreds of indicators present over there, and lakhs of traders are using different strategies, different indicators. The point here is, once your stop loss triggers, think that the day is not so convenient to trade. I have to stay away from this day or for few hours. Once there is a perfect setup, again I will enter the market. Okay, novice traders do like exactly opposite. They will enter after they see again this green candle. This day it has given some profits, but most of the time when they enter like this, again then stop loss triggers. This is the common story for any novice trader, and I want to show you that markets are not random. Not exactly this day, every single day you see that. If you see here also, there is a reason for this movement. If you see here, there is a rejection here and the price came till the next pivot, because professional traders are using this indicator and they know how to trade this indicator. They don't take random trades, and if you see here, all these sideways move may take lots of stop losses of novice traders, because they enter at here or here. Sometimes they have some profits, but they lost at the end of the month. Once you understand the system, you will act upon it. Okay, and if you see here, they wants to make the price down from here. Day traders want to take the price from here to till here. This is the reason why sideways moves occur. And I want to show one more thing to you, that markets are not random, because if you see here, this is the 200 EMA and this is the 20 EMA, where the price rejected from 20 EMA and a move has happened here. This is called the confluence, power of confluence actually, and these two lagging indicators are indicating that the price rejected at this area may go down. At the same time, swing traders are entering when they see a red candle here. This is called power of confluence, and these two different indicators from CPR pivot points and moving averages, these two are acting and in the same way and moving the price downwards, and day traders don't know about these two indicators. They took the trade here and their stop loss triggers, and they frustrated why this is happening to me only. This is not for you only. Those who don't understand the markets, they will suffer with losses. Okay, and if you see here, this is the place where you have to stay away from the markets. Whenever you are particularly a buyer, you have to stay away from these markets, because you enter with big lot size, and your if stop loss triggers, your losses will be much higher. Where you have to enter? You have to enter in a place where if you enter here, there should not be any obstacle above you, because I know these indicators. I will not enter whenever there are obstacles like 200 EMA, 20 EMA or the weekly pivot. And you don't know, you may have the question that we don't know all such indicators, but how can I know there are some obstacles in my way? Because if you understand a system, treat that system for a longer run, and you will get the profits. You don't know all the indicators over there, I know, but if your stop loss triggers here, stay away from the market. That means not all days your stop loss triggers. In a month, if your stop loss triggers for 5 times and your profits triggers for 5 times with 1:2 risk reward, you lose around 5,000 rupees and you will win around 10,000 rupees. 10,000 minus 5,000 equal to 5,000 rupees net profit. Okay, 50% probability indicator or a strategy is so good to trade in the markets. This is the one thing I want to share with you. If at all you like this video, please share this video so that it will reach the needy persons, and those who have doubts about sideways days, why sideways days are occurring, what is the reason for the stop loss triggering, and how we have to think at these days, you can share to them. Thanks for watching my videos. If you like the content, please give me a like. If you have any doubts, please feel free to ask in the comment section. I will be very glad to answer to your questions. It will benefit you and me also, because I try to improve a lot to answer your questions very well. Thank you so much for watching.